In this chapter, the author discusses the impact of taxes on production and employment. While government spending may create wealth, the taxes used to fund that spending may destroy even more wealth. It is not simply a matter of transferring money from one pocket to another. The government spends the money taken from one person and gives it to another, but the effects on the person from whom the money is taken are often forgotten. The burden of income taxes falls disproportionately on a minority of the population. Other types of taxes are also necessary to supplement income taxes, and these taxes affect the actions and incentives of those from whom they are taken. When a corporation loses $1, but is only allowed to keep 60 cents of every dollar it gains, its policies are affected. It does not expand its operations, or it expands only those attended with a minimum of risk. People who recognize this situation are deterred from starting new enterprises. Old employers do not give more employment, and others decide not to become employers at all. Improved machinery and better equipped factories come into existence much more slowly than they otherwise would. The result is that consumers are prevented from getting better and cheaper products, and real wages are held down. When personal incomes are taxed at high rates, people begin to ask themselves why they should work so hard for the government, and only a small portion of the fruits of their labor for themselves and their families. If they lose the whole dollar when they lose, but can only keep a dime of it when they win, they decide that it is foolish to take risks with their capital. The capital available for risk-taking shrinks, and capital to provide new private jobs is prevented from coming into existence. The government spenders create the very problem of unemployment that they profess to solve. While taxes are necessary to carry on essential government functions, excessive taxes can discourage production and employment. The larger the percentage of the national income taken by taxes, the greater the deterrent to private production and employment. When the total tax burden grows beyond a bearable size, the problem of devising taxes that will not discourage and disrupt production becomes insoluble. In conclusion, taxes can have a significant impact on production and employment. While government spending may create wealth, the taxes used to fund that spending may destroy even more wealth. A certain amount of taxes is necessary to carry on essential government functions, but excessive taxes can discourage production and employment. It is important to strike a balance between necessary taxes and those that are excessive and detrimental to the economy. Subscribe Libertarian Facts.